Hey, good afternoon. Welcome back. Today is Tuesday, 10th day of March, 2020. Audio difficulties here on the startup. So let's do a sound check. I know you didn't hear the intro because it didn't play. Yes, Tim, zero sound. Now you should have sound. Tell me if you have sound. Got sound? Okay. All right, we got sound. So we skip the audio today. We go straight to the meat. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds, and that'll give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, not to worry, point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You'll also find us streaming live on YouTube, Facebook, Twitter, and coming to Trading View. We have the encoder software set up on our end, but on the Trading View end, it's a little more complicated, and so they tell me that they're going to probably still need a week, possibly two, to get the kinks worked out of that. So we're excited to be a part of the Trading View community. We look forward to meeting lots of new folks. It is the 350th most popular website on the internet, and to tell somebody you came in 350th in a race, it doesn't sound too exciting. However, if you back up and take a look at the big picture and how many websites there are, just on the light net, the above ground, the tip of the iceberg. Remember, 80% of what's out there you can't even find with an ordinary browser. Called the dark net, the underground, the seamy underbelly of the internet. It's where you go to buy drugs and hitmen and guns and just all kinds of stuff. But today's show is not about the dark net. We did a show about the dark net. In fact, I took the audience on a tour of the dark net back a few years ago when it first became common knowledge that it was a thing. So stay away from there because you may not get the coronavirus, but I got to believe you're going to get some kind of virus there. Imagine logging into a website using your credit card to buy a list of stolen credit card numbers. What? That's where crypto and I guess prepaid debit cards come into play. All right, so let me bring up a chart. Might as well start with the S&P 500 daily chart. Now I've got the continuous chart running. You can't trade the continuous chart, but it's beneficial when you want to take a look at more data than just the current contract. So we're currently in the March contract, and we'll be rolling that, by the way, here shortly. All right, let me go ahead and open up John's mic. I see he's here. So let's do it. Hey, John. Welcome to the show.
Hi there.
How are you? It's going to be about another week or two. TradingView's having some issues with the encoding software on their end. We've got ours up and running, but it's a little more difficult on their end. So we'll probably just revert to the old schedule here for the next week or two until we're ready to actually go live on TradingView. Yeah. But you're here, so let's hit it. Quite an eventful session. What would you like to look at first?
Look, last night I actually caught the bottom of this thing. They dropped it down. The Nasdaq went down about 150 or something like that, and then it kind of just turned out of nowhere. Well, it did not out of nowhere. It actually tested the second limit, which I consider to be a pretty important level. And we bounced off it, and from that moment, really the market was in a very bullish posture, rallying, from down 200 or so on the Dow to up 1,000 during the night. So it was a big deal, 1,200 points. But it ran into trouble around about 6 o'clock in the morning, and we had this kind of a downer, which I was actually expecting, because we've seen this movie before. In fact, I said yesterday that we could come down intra-session and possibly make new lows, even below yesterday's lows. It doesn't look like that's going to happen now, because we've tested, we've kind of come back from yesterday's entire up move. Probably came back about like 75% from the high, right. and now we're a considerable way higher. We've kind of recovered here, kind of sneakily here. We were negative on the Nasdaq just a short while ago, not by much, 10 or 20, and now we're up 165. It's just like, kind of crept up. Mm-hmm. I'm actually experimenting with some new stuff that just actually picked these two turning points absolutely perfectly. And that was a hard bottom to pick, because it was like a falling knife. It just turned on a dime. Mm-hmm. So the best case scenario is the lows are in, and we're going upwards from here, possibly substantially higher. The second best scenario is we could rally up quite a bit. I'd say we could rally up to about 8,600 on the Nasdaq, somewhere like that, 8,500, 8,600. If we can't get any further and turn down, then we are in trouble. We're going to have another leg down. I would say, look, this could be a kind of a failed C wave, because for this thing to be a perfect three-wave pullback from the highs, we should go to 7,500. We still could. The week's not over yet. We might get there Friday or something. I do believe that if we hit that number, 7,500 on the Nasdaq, I haven't really gone to the S&P yet to figure it out, but it would be the equivalent of going down to about 2450 on the S&P. And if you remember, that's a favorite number of ours from a while back. I would expect the market to bottom and go up from there, possibly quite dramatically, because if we get down there, look, we may have already done it, but what's interesting is last night's rally took a while to get going, but it was relentless. It just kept on going up and up and up, and it had these little pullbacks during the night. But and it just, you had to buy the pullbacks. It just but it was kind of back to normality in terms of not too jumpy. It was very steady, solid buying all night up until 6 this morning. And every pullback, the pullbacks were short, were minor, and the market sort of went up with ease, actually, and quite a bit of power off each of the pullbacks. We're actually experiencing like before this. Remember, a couple of hours ago, we were kind of like getting the heck kicked out of us, pretty scarily, and it came down, and right before Trump came on, sort of with the cabinet meeting having with leaders, the market turned and we've gone up. Right. So, but the question is there help coming from the Fed or intervention, or are we going to roll over from here? Look, this reminds me, it's only 12:20 right now, so this reminds me of a time when we were on the show and we had a very similar kind of a day. I think we were up and the market started, literally spiraling down, and it actually bottomed around 1:30, 2 o'clock, something like that. And then it rallied like just tremendously into the close. That could still happen today. I don't think it's going to happen, but I think we've nipped this in the bud. So we may rally pretty strongly into the close. Guess what? This is actually tracing out the 2009 11-year anniversary bottom rather amazingly similarly, actually. Yesterday, as I mentioned on Friday or Monday, yesterday we, in 2009, remember, it was March the 6th was a Friday, just like this year. Monday, March the 9th, the market came down and tested the lows. It sure did that, right? And but it turned off the second limit and had a rally and then came down again. And guess what? It bounced off the second limit last night, just a little bit fractionally below it. On the chart, actually, if you can put the S&P daily up, Dwayne, right
Sure,
now.
you bet. So our long trigger last night for the S&P was 2802. So
Yeah, you probably did great.
The first move was 28 points, and then we got back below the trigger, as we expect, and then we ran 77 points, which is about $3,800 per contract. We've not triggered on the short side yet, but I foresee it potentially coming here in this session. Now, the daily chart is right here.
From low to high last night was about an $8,000 move. Okay, this is a different kind of a picture we're looking at on the S&P, but put the NASDAQ up, the NASDAQ futures.
Let's see, we could use, what kind of time frame you want?
The daily.
Daily.
Okay, you see how we had these two tails down here last night. We've gone up, we went right up to the top. And I'll just go back down again to show, make it bigger. Can you make it a little bit bigger?
Bigger, as in taller?
Yeah. Now you see, this is a very dangerous setup, actually. You see where we went slightly lower last night, and slightly lower, and we didn't make it up to the high this morning, or the high of yesterday. This is actually a pretty dangerous kind of a setup. If we get back up there today, maybe it gets negated, because it would be effectively a double daily reversal where we gain back everything we lost yesterday. Still could, and we could actually gain more, depending on how this whole day unfolds.
Right.
But and look, if you can see how, if you just go down to 7,500, to where we can see 7,500. Okay, so, and if you can squeeze it up a bit, so.
There you go.
So you can see how this is a kind of a three-wave deal, right? And in that three-wave, or in the B wave, we had two record up days. Unfortunately, you had this record down day, but you can see how getting down to 7,500 would be a potential bottom in that general area, and that actually happens to be a perfect ABC from low to high and down. If that's the case, and we, what was it? I'll tell you something else that was interesting last night. This is what I learned from Peter Steidelmar, market profile founder. When it went, the little trick on catching this bottom last night was when it went down to the second limit, the price got rejected right away. It was only done for a nanosecond. Like, it turned, only went slightly negative for a nanosecond, and it started turning up. And really, from that rejection point, look at the rally we had. We had like an $8,000 rally in this thing. So, but obviously going down through these, if we go down through this bottom again, it's not going to be pleasant. It's going to be rough going. Maybe getting down to the 7,500, possibly even 7,000. It could go a little bit further. But you can see how if we get down there, and actually if we do reverse back upwards, you could make the argument for a very powerful rally. Now, obviously at the moment the news is bleak because of the number of infections. But the news out of China is, if they're telling us the truth, is amazing, because there's no new infections coming outside of the Hubei province, where Wuhan is, and there's only like 15 infections coming out of this province. So I mean, that is a gigantic development. Secondly, there's about 65,000 recovered now, even though there's about 115,000 cases. The net is certainly contained, in the sense of 50, 60 active cases, if that's the limit of the moment. If, by the grace of God, these infections, don't go exponential, we could, you could make an argument for a rally like we've never seen.
Yeah, I would say 10 grand probably.
And coming off a three-wave pullback, we go back to kind of a bull market scenario potentially, and that would be pretty amazing, because the market sees things ahead. I mean, look, the market might be figuring out that this thing is going to be gone by late April, May, or going into the summer, and the market is always ahead. The market's going to see that ahead of time. So it could actually, the news could actually get worse while the market gets better. It's not the first time it's happened. So you have to keep all these things in mind. But technically, and look, right now, I mean, we may not get down. This C wave has not gone the whole distance, right? The C wave down on the Nasdaq. In order to complete a measured move, it would have to go down to 7,500. But this is a failed C. It's actually more bullish. So if we and if you go to the weekly, check out the weekly right now.
Yep, I sure will. Let me. So that was a 13,000.
And don't maybe the Fed's going to wake up in a few days and do something, and then we've got the meeting next week as well. Doesn't look like they're going to do another emergency rate cut, but they're probably going to cut rates at this next meeting.
Okay, what was it you wanted to see the daily on, John?
Sorry, a weekly on
on
the Nasdaq.
Weekly on the NQ. Okay.
Yeah, we're coming on done now, Dwayne. So
I'm looking for lower prices today. So
also, I mean, just looking at that S&P set up there with the limit and everything, honest to God, it doesn't really look like a bottom, does it? I mean, it kind of looks like we're going to have another leg down.
I'm sorry to say, I don't just, for the sake of investors, I'm sorry to say that it doesn't look like we found a bottom. For traders, traders take whatever comes our way as long as it's moving. All right, so you want a weekly chart of the NQ or the S&P?
NQ.
Okay, and I'll put it on a continuous contract. So there's weekly.
Yeah, I mean, look at right now. You got a tail on that. If we finish the week in positive territory, after this kind of a shellacking this week, that would be pretty impressive. But it does look like, it may even be next week we go down, but it kind of looks like we've got to go lower before we can go meaningfully higher, given the damage of this whole scenario right now. But the potential for a snapback, given that we had 2 record up days on the B wave, is somewhat encouraging.
Mm-hmm.
So But it you know, requires intervention and a whole bunch of other things. Oh, can you put up the gold? I've got some ideas on the gold.
You betcha. What kind of time frame you want?
I think the daily, actually.
Okay. There we go.
Okay. You see this, the first run up to 1680 or so, 90, you know, we came
Right
back,
Mm-hmm.
right. We came back pretty sharply, you know, about
To support,
$150,
right.
maybe a couple $100. And then we just like rebounded equally, even more dramatically in some respects.
Right.
And now we're on another trip that looks like it's, to me, it looks like we're going to come down. We don't have to, because if for any reason gold blasts through 1680 here in, you know, to later this week or to later today even, then it, you know, it may just go straight up. But it feels to me like it wants to come back to the 1600 or maybe 1585 area, kind of an equal, like a, you know, an equal distance down from
I think
1680.
1620 on the downside, I think it's actually possible.
Right, right. Then the turn, and then, you know, this would be what I call a, look at the way this thing's gone up. You know, we've had the series of these 1-2s, we've had a kind of a very sort of semi-exponential up move, and then this sharp correction. The next, I believe the next up move will be, you know, one for the ages. I think it'll be maybe an unstoppable move heading up towards a 1750, 18, maybe even all the way to 2000, 2100. Because this is kind of like a double 1-2 developing here on this pullback. And if we resume to the upside, I believe we're going to go into a third wave from somewhere in the 1600 range, and I think that third wave will be unstoppable. And the reasoning behind it is pretty fair. You know, all this stimulus, the Chinese stimulus bailing out the banks potentially, 2 trillion in debt this year is likely to be the case now. So it's all piling up for gold. And there's, and at the same time, another rate cut, you know, might, you think about it, you know, we go down towards that 1600 or so, get the rate cut, and next thing you know, we're heading higher, new highs before you know it. So that's kind of the way I see the gold going right now.
Yeah, what's up with silver?
I don't know, those wicks up at the top concern me, but I mean, you know, thinking short term, you know, I do see it going down from there. And where we're going to bounce is what we don't know.
Yeah. So look, right now, well, that's kind of just, it's just thinking. Now the silver also, at some point, definitely, I think past 1750, going on 1800, it's probably gonna be on its way. And once it gets through that double top at 19, I think it's going to be unstoppable. I think the day it takes out that 19, you're probably going to see a dollar and a half up move take us through 20 or up towards 20 within a few days. It really looks, and what's interesting is the silver is kind of holding its own here, while the gold is somewhat lower. So that's another thing that could be interesting. The platinum is still, maybe you can put the platinum up, Dwayne.
Sure. There you go.
You know, well, coincidentally with this $100 move down in the gold, you might just get a new low in the platinum. I mean, I think if platinum came down to 760, somewhere like that, it would probably mean the low is in somewhere down in that range, and I would expect a pretty rapid up move from there when it turns. So it just, the problem with this platinum is it's been meandering for 4 years. It hasn't been able to put in a proper technical bottom, and I think making a new low this year and reversing out of it will potentially put in a bona fide bottom that could be the start of a very, very big move in platinum. And palladium, I'm not sure if palladium is through going higher either, because
Palladium. There we go. There you go.
Yeah, it's sort of a little bit like what I'm saying on the gold. Imagine if we come down maybe to 2200, somewhere like that, 2250. It could be a 3-wave pullback, and then we start another up wave that could take us up to 3400. Ever since 800, when we made our first call, or even 500 before that, we've been upping our targets, and the last target was certainly 24. I think we might have mentioned 27 or 28. Now we did. We've had a target of 34 for a while, so I wouldn't necessarily rule that out. And I think if we got up to 34, that would there's no way platinum could stay down as a competitor to palladium. It might be the whole a whole new ball game. So. And the other thing is, given that we've gone from 500 to 2800 on this cycle, which is six times, almost 5.5 times upside. The last time gold in 2001, palladium tripled, gold went up 7-fold, and silver went up 11.5-fold. Silver didn't get going till 2004, so it's late to the game, but when it gets into the game, it goes exponential, and it'll overtake the gold. It'll outperform the gold probably 2 to 1, maybe 2 to 1. Mm-hmm. Platinum is also it's a late starter and an early finisher. That's what happened in the last cycle. It ran up to 2400. Was the most expensive precious metal in the world precious metal at the time. It topped out in 2008. The gold went up to 1923 and 2011. Platinum didn't make a new high. That was a non-confirmation, and the silver topped out 6 months before the gold as well. So these are all important sort of symptomatic behavior of these metals that I believe will most likely play out in this cycle that we're in right now. Incidentally, getting data on the Dow in 1920-21 is very difficult. I thought it was the curse of 21, but it's actually the curse of 2020, and everything that's going on right now is kind of a repeat of the 1920. The market topped out in January, right in the first few days of January 1920, at about 108. It might have gone a bit higher, possibly in the first quarter, because it's only giving 6-month or year data. Mm-hmm. But it ended the year down at about 70 or maybe 60.
What was that? What was that?
The Dow. From 108. I think it got to 120 actually in 1920, and it got cut in half that year, pretty much cut in half. Hope that doesn't happen here, but it's certainly it's deja vu. Boy, a century later, it's definitely something similar going on here.
I agree. Yeah, there's
so
a
it wasn't
chart
21 after all.
There's a chart that takes us way back.
Yeah. By the way, that monthly top, just open that out a bit. Look at that double top there. That's a very high quality, a very powerful top. I mean, look at the bottom back in 2016. Remember that? And look how far we went. Okay, and the opposite now. This is very dangerous. This thing here. So and you know the way they, I mean, this morning, you know, they rally Apple and everything overnight, and you know, these people are panicking. You know, these big funds are, you know, they're long up to their eyeballs in all these stocks, and they, you know, I'd say a lot of these guys aren't even out of this stuff yet. You know, they're probably hoping the market's going to recover, and I think there could be some, you know, devastating losses for some of these funds before too long. Especially Tesla, you know, people buying Tesla at $965, things like that. You know, they're already down about 50%. A lot of other, I mean, Boeing. Check out Boeing, Dwayne, jeepers.
Boeing, okay.
Look at the big top on Apple too.
Okay, so that's monthly. If we bring it back to a daily.
It's really bad. Really bad. Oh, Boeing is in a world of hurt right now. It's breakaway gaps all the way down. It's you know, it's very tough situation.
Yes, it is.
So have a look at Apple again.
Sure.
You know, well, Apple is sort of like, you know, encouraging the story in the sense that if we were to rally and go green on this candle today, you know, near the 280, you could argue there's a chance we could, you know, power higher.
Right.
But unfortunately, that doji that's developing there probably means that we're going to head lower down, kind of probably to 240, maybe 260, 240, somewhere like that. But then it could be a three waiver as well. So, you know, Apple's certainly technically stronger than the market at the moment, in the sense that it didn't make lower lows yesterday, you know.
Right.
So, by the way, I think Twitter, check out Twitter. TWTR.
There we go.
You know, there's really no bear market in Twitter. I mean, you know, it's kind of like business as usual, and I would be inclined to be buying the dips on Twitter, possibly even hold a position in this stock.
Have they made any money yet?
Yeah, I think that, yeah, they had a pretty good report. You know, that's why the stock jumped up in February, but it got, you know, it succumbed to the same problem that all the other stocks have, but I mean, to a lesser degree, other than the fact that, you know, Twitter made its high 6 months ago. But I think this, look, I've got a feeling this fellow who just bought $1 billion worth of Twitter, he's made a deal with Jack Dorsey. I think he's told Jack Dorsey to quit messing with people, you know, like me. You know, getting, you know, suspended from being able to do things on Twitter, and I mean, it's just unbelievable. Dwayne, I sometimes save people for reference, and I go back to them, and they're gone. Like they've been suspended, or they don't exist anymore. Don't ask me what they do to get delisted, but it's just unbelievable. So I think this guy is kind of.
So is this who you're talking about? His handle on Twitter's @$1 billion TV?
Yeah, I think this fellow's told Dorsey, you know, his fortune, and told him to get his act together and stop harassing, you know, Republicans, and so but I also believe that this is kind of like an activist manager, right?
Right.
And I wouldn't be surprised if they're engineering a buyout, or some kind of a, they definitely want to get the stock up, that's for sure. This guy is not, he's not taking $1 billion position in Twitter to lose. And so Twitter is actually weathering this storm pretty well.
Well, the fact that somebody is going to invest $1 billion to finance Twitter's buyback of $2 billion worth of stock. Granted, these folks are all a lot smarter than I am, but that just makes absolutely no sense to me at all.
Yeah. Look, the problem with Twitter is that there's a lot of, the FANGs, probably all of the FANGs would be potential contenders, buyers of Twitter. And they've got a lot of money. So it looks to me like, I think you just got to hold Twitter as as long as the market doesn't go to, really bad. I think it's not too risky a hold right now. And it might get rewarded. It might get very well rewarded. This, because a buyout can come right out of the blue.
Sure.
And it feels to me like something like that's going on. So.
Okay.
Alrighty. Well, listen. Thanks very much for the invite.
Thank you, John. Appreciate it very much. Talk to you soon.
Okay. All the best.
All right. Okay, guys, I've recapped just 2 of the Concierge Trade Alerts so far. The S&P. If you didn't grab a screenshot, Michael's going to come right now and give us a recap of everything that happened in the live trading room this morning. If you didn't grab a screenshot of the Concierge Trade Alerts when I put them up earlier, by all means, feel free to grab one. 5, 4, 3, 2, 1. So the ones I've recapped so far, the S&P 2802, we had a 28-point rally. Important prices, important areas are almost always tested. So price gets back below the trigger, runs up a total of 77 points. On this pullback here, we just barely missed getting below the trigger. So from here to the swing high, 77 points, $3,800 per contract traded. Now, this is what the market made available, okay? This right here is the trade to target. This is the next trade to target. If you entered at 2802 and you got out at the swing high, which again is difficult to do, that's 28 points. Alexa, 28 times 50. Okay, $1,400 per contract traded. Then back below the trigger to the weekly trading zone. That's the trade to target. And then on this pullback, the swing low was 2803 and a quarter. So again, we didn't quite get below the trigger, and we've not triggered on the short side. And the only other one I've recapped for you so far yet is the NQ. Last night's alert said to buy 80.75. The weekly trading zone overhead, which is the trade to target, is 83.16/17. So right about there, right about where we expect price to find resistance. It sends it back down to the trigger, below the trigger, and this first spike up 80.75 to 81.37. So that's about 50 points, give or take. $20 a point. It's $1,000 right there in that wick. That's how big these markets are right now. Okay, after Michael does the recap, I'll go over all the Concierge Trade Alerts. I'll go over Logic 247. Despite all that's happening, we've had a great week, both with the alerts, the Concierge, and the Logic. So, and also last night, early on in the Globex session, I did some order flow trading commentary in the Telegram channel. And I'll explain to you what that is, and I'll break it down for you. And of course, answers to your questions when I come back. Michael, it's all yours.
Okay, I am ready. Let's bring it over here. And, you know, we had a great day too. And, you know, it's, all this activity has just been crazy. And, you know, the short-term trading, though you have to be quick, it's awesome. It is just awesome. There is just so much opportunity.
Yep.
I mean, I'm watching it right now. There's a short right there. There's a short. See,
That's why I did that's why I did what I did last night in the Telegram channel, just to point out, you know, how much opportunity there is. Opportunity is always there, but timing is another matter. And I said this over the weekend in a discussion on Telegram, is you should never open up your charts to place a trade. You should open up your charts to see if there is a trade. A world of difference. I'll let you ponder that until I come back. Michael, it's all yours.
And as you said that, there were just two or three trades that hit the ES, and I mean the markets are just crazy right now. And so I'm not going to go over every single trade setup. I'm going to go over the ones that we did. Okay, because the markets are just crazy right now. And it would take me probably another hour to go over every trade setup. But just the ones that we did. We're going to start out with gold. All right. Now, our first trade setup here on gold, we stopped out. And then it went up to do what it should have done and put in a higher swing. Now, I'll blow this up a little bit for you. Right here. We stopped out and then it went up and did what it should have done. And then we got a little bit back here. And, you know, this was -8 here, +5 there. And that continued down. But I was trying to watch everything else and answer questions and text messages and all that. And then, you know, and then the market just got out of control. And there was a short here, a long here, a long here, a short here. Then we picked up 3 more ticks right here to get us back to break even on the day. And then I said I wasn't going to trade anymore because the markets were just nuts. But I did one more over here, picked up 5 more ticks. And then I really did stop. But there was so much opportunity today. You know, working my time frame, not Dwayne's, not John's, mine. There was a ton of opportunity. And what I was telling everybody this morning was look down here at the cycle. I mean, the slingshot. And look at the cycle and the separation between the green line and the cycle. You know, when you see that kind of separation, something's happening up here. And I've been saying that for a week. And, you know, it just happened all day. All day. The same thing. Over and over and over. So the slingshot is just giving you all this information. And like right now, look at it. Are you going to act on it? I don't know. The euro was probably the most sane of all the markets today. And it's just now getting down to that line that I drew Sunday night. And, you know, it looks like it's really going to get down there. You know, this is the low of the day, but it looks like it's really going to get down there and fill that gap up. In the euro today, yeah, well, on the ES we had, well, on gold, sorry, we had +5 on gold. In the euro, let's scroll back. Take a look at the euro. On the euro, we had 1 trade that we took right here. We were +16 ticks. There was another one right here that I didn't take. No, there are a bunch that I didn't take. But, you know, there was so much activity. And I said at one point, you know, I'm just going to stop trading and I'll just call them out for you. And that's what I did. Huge downturn right here on the euro. And another one right there. Half retracement. Half retracement of the half retracement. Full retracement of the first downturn. And a full move down. So right here is where it's trying to go, this dotted brown line right here. Now I put that on Monday morning, yesterday morning. And the euro was the only one that hadn't made it down to fill the gap. And there it is. It's filling the gap. Okay. So we ended up with plus 16 on the euro on one trade today. Now, crude oil, we had just a couple of trades on crude, but there were a bunch of trades. But as I said, I decided to just stop trading after a little while. There were a bunch of trades. Now, I didn't fill in the spreadsheet, and I didn't bring it up yet, but I will. Okay, here we go. Well, on crude, I had just 2 trades. I had this one right here where I picked up 20 ticks. I mean, there were a bunch of trades. There. Switching directions. Nope, we didn't quite switch. We had a break even there. Another short there. There. I mean, there was just so much opportunity today. And there has been. And I was showing everybody this morning about this leg length right here, and I said, this is what it should do. This is what price should do. And there was a shorting opportunity right there. And you know what? I'll make a copy of that if I can. And I'll paste it right over here. Is that right? Yeah. That's what it should have done. Gotten down to there. And it did. It just took it a little while. Well, during the day, it seemed like a little while because it was a couple minutes, but the markets were just crazy. And there was so much opportunity today. We ended with plus 20 on crude. And on the ES, the ES was nuts too. I mean, as much as I don't like the ES, because usually it doesn't move, lately it's just been crazy. And I'll show you again, the liquidity on the ES is probably 1/10 of what it normally is. 1/10. So what does that tell you? Well, the algorithms and institutions are staying out of it. And we're still in there fighting the fight and winning. It's been, this past week has been a really, really good week. And I will bring the spreadsheet out in just a minute. I haven't filled it out yet, but I will bring it out in just a minute. But on the ES today, I don't know if I had time to mark stuff up. We had 2 trades that we actually took. There were a ton of them. One there, one there, one there, one there. Turn it around, and one there. Now the slingshot's messed up. I'm not going to go through them all. That was the first 7 minutes. There were about 10 trades in the first 7 minutes. What we did do, we took a trade right here, picked up 8 ticks on that, and we did one more trade with just 1 tick. Okay, now this right here is the level that I highlighted Sunday night. And you can see it's come back to it and gone away from it and come back to it and gone away from it. But, I mean, you just got to get in there in the training room in the morning to experience this. I mean, this doesn't happen very often, like once in a decade. You get craziness like this that is there for a whole week. Let me get the spreadsheet out for you. Hang on. And I haven't filled it in yet, but I will. It's loading up right now. Okay, here we go. So today is the 10th day of March. And today in the euro, we made 16 ticks. In crude, we made 20 ticks. In gold, we made 5 ticks. And on the ES, we made 9. So that's what, 112.50. Okay. So on the day, we're up 462.5. Today, it took 6 minutes and 1 trade to get to the goal for the day. And we took a total of 4, 5, 6, 7, 8, 9 trades. Today is the 7th day of the month and the 43rd day of the year. So if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 10th day of March. We made 16 ticks on the euro, 20 ticks on crude, 5 ticks on gold, and 9 ticks on the ES. Put us at plus 462.50 on the morning session. Today it took 6 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 9 trades. Now, so far in the month, we're up $3,195 per contract. That's over 7 days, averaging $456 per day. That is 1 contract, 2 hours per day. And look at this right here. So far this month, we've had 7 trading days. And out of those 7 trading days, we've made our goal for the day on the first trade 6 times. That's significant. On the year now, we're at $10,147 a contract. That's over 43 trading days, averaging $235 per day. Again, 1 contract, 2 hours per day. And I miss half the trades. I mean, I just stopped trading today and yesterday. I just stopped trading after I was in it for probably an hour. I just stopped trading because it got crazy. And yesterday I had connection issues too. But anyway, if you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. And over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. You can click on that or any one of these other things down here that say free 5-day trial. And it's going to bring you to this page where all we ask for is your name, your email, your phone number. And you can tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Because we really do the one-on-one training. You just have to ask for it. Okay? Hit the send button. You'll be sent a confirmation link. And then we'll know you took the free trial at that point. Okay. And that's it. Dwayne, with that, you can have it back. Fabulous Phoenix, Arizona, overlooking the South Mountain, America's largest city park. Okay. Dwayne's not there, but order flow. Bob Z, you talking about order flow. I'm pretty sure that's in reference to something that Dwayne just said, where he was watching it last night. Something that I look at all the time, and I've been saying this, from workshop number 1, is the total bid and ask. Okay. I'm always cognizant of that. And it's not really order flow, it's just the total bid and ask. It's liquidity. And I'm always cognizant of that. All right. So we're waiting for Dwayne to come back.
I'm right here.
Oh, there you are. There's Dwayne. Okay, so I was just showing him how crazy the markets were today.
Gotcha.
again. In this time frame, they are. I mean, yeah, Valerie and I yesterday flipped to a higher time frame, to a 5-minute, and it was still crazy, but the risk is different, and so it doesn't conform with what I do every day in here. But it is different. The trade setups are the same. It's just the risk. But so today, for the recap of the recap, it took 6 minutes and 1 trade to get to $100 per contract. That was today.
Okay. Alrighty. Well, that's a good bingo.
Once again, a bingo.
Alright. So we've covered the S&P. This is what's happened so far in the S&P. Okay. We've got a leg, we've got a retracement. If this leg takes out this low, then we're going to have a window of opportunity down to last night's Concierge Trade Alert on the short side. Okay. If buyers come in and push us back to the trigger, then we'll look for another run to the weekly trading zone overhead. Now, I'm going to have to take a 5-minute break here, guys, in about 10 minutes. So just be prepared for that. I'll get through as much as I can in the next 10 minutes. And then we'll just hit pause for 5 minutes, and then I'll be right back to finish up. But it's important to understand that these alerts, okay, go out to every one of the CFRN passport holders every evening shortly after the Globex open. Concierge Trade Alerts, the ones you see on the screen, are based on previous price behavior. The Logic 247 alerts, those are based on current price behavior. Whereas the Concierge is a static report issued once per session, the numbers are good for the entire session. So on most days, we do see multiple triggers on the Concierge Trade Alerts. The Logic 247 starts at 6 p.m. Sunday evening and runs around the clock until Friday afternoon at 5 p.m. Eastern. Something I want to make very, very clear. Okay? Everybody gets the same alert. Whether you take advantage of the alert or not, that's entirely up to you. What I show you here during the recap every day, it's not a woulda, coulda, shoulda. It's exactly what happened. Someone on Friday said to me, it really frustrates me when you do the recap every day. I'm like, okay, tell me, why does that frustrate you? Because I'm not getting out of bed at 2 o'clock in the morning to place a trade. Okay, don't. You don't have to. We simply present the opportunity, whether you choose to participate, not participate. That's between you, your alarm clock, your sleeping habits. We have traders around the globe, so when something triggers off the London Open, as an example, at 3 a.m. Eastern, guess what? There's people in the world, that's the beginning of their trading day. We have traders on the West Coast stay up till midnight waiting for that London Open at 3 a.m. Eastern. That's midnight. Many people stay up to midnight anyway. So from 12 to 1 a.m., 12 to 2 a.m. Pacific time is often more than enough opportunity for someone to reach your goal for the day, whatever that might be. So there's no denying the fact that the published alert triggered. It went to the trade 2 target, came back to the trigger. This time, unfortunately, it didn't dip quite low enough, as we did here, to signal the second entry. Okay, and then price came back a third time, and it didn't quite touch the trigger. Provided a nice bounce right up to the weekly trading zone, where we expect to find good resistance, and we did. Now the S&P, remember I just explained, one of two things will happen. Price will go back to challenge the trigger again, or it will come down to challenge this low, which then creates a window of opportunity between the low and the trigger. So patience is required to understand what the market is doing, and then allowing it the time and the opportunity to actually unfold. So that's the story on the S&P. The story on the NQ, similar. We're in the second or third trigger, depending upon what time frame you're executing off of, but you can see it very clearly here on the 30-minute chart. The trigger was 80.75. The first run-up was 81.39. Alexa, 81.39 minus 80.75. We messed with the volume on my Alexa. Anyway, the answer is 64. For some reason I don't have audio on Alexa. Alexa, 64 times 20. I gotta reboot Alexa. Alexa, 64 times 20. So that's $1,280 per contract traded. Okay. Now that trigger happened at 19:30, 7:30 p.m. Eastern. Okay. Wait a minute, let me do the math in my head. I got to get used to the 3 hours opposed to the 2 hours now. So, yeah, the alerts went out at 7:05 p.m. Eastern. And so, this is East Coast time right here. So 7:05 is 19:05. So here's the 1900 candle. It was during this candle into the next one that we triggered. The market stood and delivered. Got back below the trigger, made a pretty significant move up to the weekly trading zone overhead. And that exact number is 83.16/83.17. On the Dow, the alert was to be long 24,315. So you're right about there. And again, price didn't quite dip back below the trigger. Now, when you're executing on smaller time frames, even though price here, the swing low was 24,356, so they didn't put it below the trigger. Okay, but when you understand how markets work, when you understand our strategy, when you understand our methodology, okay, price comes back into this important area. We print a doji, we print a green candle on the 30-minute chart. On your smaller time frame, whether you're executing on the 5-minute or even on the range chart, it's pretty simple. You are looking for buying opportunities to belong the market. When the Concierge Trade Alerts come in each evening, you put two lines in the sand. One on the long side, one on the short side. Okay? Then you can trade into the trigger. You can trade at the trigger. You can trade on the other side of the trigger. But in order for any of that to happen, you have to be present. You have to be in front of your computer. And you have to be willing to put on or take off the trade. So the long side of the Dow from 24,315, we ultimately put in a swing high at 25,000. Alexa, 25,000 minus 24,315. That's 685 points. Alexa, 685 times 5. It's $3,425 per contract traded. Now, getting out at a swing high or a swing low, as you know, is extremely difficult because nobody knows it's a swing high or a swing low until after the fact. Okay. Make no mistake, no one knows beforehand. When you enter a trade, you do not know what will happen next. You don't care how many indicators, how many oscillators, or how big your crystal balls are. You don't know. And that's where many traders struggle. I've done my work, I've done my analysis, I've built my narrative. You know, this lined up with this, and this matches that. So I expect it to do this. That will leave you heartbroken, okay? Because all that work I just described and explained, that should put you in a state of mind where you do understand what the next high probability move is based upon how markets work and based on the information that the chart is giving you, okay? I mean, when price pulls away from the trigger, comes back to the trigger, and it looks like in this case we just barely got below the trigger, okay? And then you print a green candle. Well, hopefully at this point you know enough about reading a chart that you understand that coming out of here, price is going to attempt to challenge this swing high. It's going to try to put in a new high. Price is always trying to break something, be it a previous swing high or a previous swing low. So once you pass this point, then you simply look left to find your next area where the market will potentially find resistance. Okay? That process repeats itself over and over, again and again, day after day, session after session. It doesn't change. We've published the Concierge Trade Alerts. We're in year 7, I think. We're in week 84 of Logic 247. The results so far this week for Logic 247, we've had a total of 17 alerts issued. 2 are still waiting. 15 of the 17 were actionable. And so far, nothing has stopped out. Okay, 0% stopped out is an unusual week. Over the last 84 weeks, what we've averaged is about 20% per week. Last week, which was week 83, is right there. Last week, we had a total of 39 logic alerts. Now, that doesn't include the concierge. The logic, there was 39 alerts, 10 never triggered, 29 were actionable, 2 of them were stopped out, so that's 7% of the actionable alerts were stopped out. This week, week 84, and again, the world starts trading Monday morning at 9:30 a.m. Eastern, but we're a peculiar people. We start Sunday night, 6 p.m. Eastern. First alert coming out of the gate was to sell the S&P. Wasn't too hard to figure that one out. And now there's this short on crude. Thumbs up means price found the target. Short on the Dow, short on the Russell, short on the NQ. This one, I guess, is one of the ones still waiting. This is crude, or there's a note from Val. She does the recap. No entry on the first trigger. We hedged that crude with a buy order, which did fill. Then there's crude. That's a long, 31.95, still being valid. Here's gold. That was a short on gold at 1656, down to 48/49. And now we're moving into Monday. So everything that you see here, this happened Sunday night before midnight. Okay. As we move into Monday, there's a short on crude, short on the S&P, still waiting. There's a hedge on crude to be long the S&P, to be long the Dow, to be long the NQ, to be long the Russell. And that brings us up to right where we are right here, right now, on Tuesday. Okay. Now, I'm going to go over real quick with you last night's discussion in the public Telegram discussion channel. So if you're on a trial, you have access to the alert trial discussion group. And so here's what we were discussing last night. Now let me show you. Okay. There was some commentary on crude. Then I posted a chart of the here's the S&P I previewed. There's the daily chart that I published earlier, and then shortly there later, you can see we're below that 62% fib. Okay, that's a reverse fib from this high to this low to the retracement high. Okay, that projects, just based on math, has nothing to do with viruses or politics. This is a 62% extension of this move. 100% move puts us down 25.90. Okay. All right. Now that was going into the close yesterday. So last night, yesterday afternoon, Globex open. This is crude on a 5-minute chart. Okay. 2 windows of opportunity from here. At the time I snapped this, price is either going from 32.70 to 32.80. That's just the price value that I assigned. The point I'm trying to make is where price is right now at the CFMA1 with the BBC below and a swing high right here. This candle is the beginning of an attempt to either pull back to the BBC or to go and challenge the high. Okay, so 32.70 to 32.80 or 32.20 to 32.10, whichever presents first. 2 things to remember. Number 1, when price is above the BBC, you anticipate higher prices. Doesn't matter what time frame you're in. Doesn't matter what market you're in. When price is above the BBC, you anticipate higher prices. Second thing to remember, price always reverts to the mean. In other words, if price doesn't come back to the BBC on this move right here, if instead it goes to challenge the high, it will eventually come back to the BBC. Price always reverts to the mean, and in our case, the mean is the BBC. One of the 2 scenarios outlined will unfold. As with every trade, it's about the probability. With the long side, you have to identify your obstacles. Okay, look left. With the short side, identify your obstacles. Assume the risk. Profitable or not, it's just another trade. It defines nothing. It doesn't define who you are as a trader. It doesn't define whether your strategy is truly a definable edge or not, not with one trade. That's not possible. And it doesn't tell you what the outcome of the next trade will be. In this simple example, price will either attempt to put in a new high, which means it's with the trend, or it will attempt to retrace to the BBC. That's counter trend. Nothing you can do, nothing you can buy, or nothing you can dream up can change the outcome. We're powerless over order flow. Focus on the things that you can control. accept the stuff you can't change, and then just pray for the wisdom to know the difference. So from here, this is the updated 5-minute snapshot. Okay, still haven't triggered either one of these based upon one of two things is going to happen. Price will attempt to go from 32.70 to 32.80 or 32.20 to 32.10. The long side is the higher probability because it's with the trend. The short side is a legitimate trade. It's counter trend. It does not have the same degree of high probability as a trend trade. This is why on the Logic 247 alerts, even though we're looking at counter trend opportunities all day long, all I put, that long list that I just scrolled down with the thumbs up, that's taking the counter trends out of the picture. All alerts that you see in the Telegram channel are always going to be based on the trend, unless for some reason I choose to point something out, and I will tell you that it is counter trend. So there's the updated 5 minutes. A break of the low of the doji on the chart. Okay, this little doji right here. A break of the low of the doji on the chart will be seen as an opportunity by some traders to enter short down to the top of the window. Some might trigger in at 32.30. Okay, now the window was defined as 32.20 to 32.10, but you could take an early entry if you so choose. It's discretionary trading. So in your analysis, as you build your narrative, you're determining based upon what the chart shows you, what's the market really trying to do? Is it trying to get back to the BBC on this move, or is it trying to break that swing high? Okay. Again, a break of the low of the doji on the chart will be seen as an opportunity by some traders to enter short down to the top of the window. Some might trigger in at 32.30. New 5-minute candle brought red and falling with it, so that changes the picture. This doji that you saw here ended up closing with a little red body. However, it changed blue and climbing to red and falling. Okay, that changes the dynamic. That red and falling now becomes another obstacle in reaching the previous swing high. These types of opportunities present themselves around the clock in every market, and there it is. Doji, red body, red and falling. The move was back to the BBC, filling the window of opportunity. Okay. Now that we've closed that window of opportunity, we have a new high probability window of opportunity, and that's 32.30 back to 32.40. If we're finding support at the BBC, we know that we may encounter resistance at red and falling. So, window of opportunity. Okay. Here's what happens next. A small green candle, a little bigger green candle. The wick poking below the BBC, and the beginning of a green candle above the BBC is sufficient for me to see if it holds or not. There was a question, well, do I have to wait for this candle to close? You can, but you don't have to. So again, we went from a doji to a red body to red and falling, which took us back to the BBC, which we expect to be good support until it isn't. We start to build a green candle. You can get long knowing that red and falling overhead may become resistance. And here's exactly what happened. So we filled this window, we've filled this window. This process is how markets work. These scenarios are sitting there waiting for you around the clock. You simply have to learn to see them. If we close green above red and falling, then I'm back to looking at the original long window I posted a few posts back. Okay, right there. In other words, if this candle closes above red and falling, okay, that tells me the price is going to attempt to challenge that swing high. Those 3 wicks make me want to see price trade 32.70 before going long. Doesn't mean you couldn't enter at 32.60 if you wanted to. Okay, and these are the 3 wicks I'm talking about here. And bang, bang, we filled the window of opportunity. There it is, swing high 32.81 so far. We'll call the new channel, I think, if I continue to do order flow trading. And when I speak of order flow, I'm not talking about watching the DOM myself. That's the traditional way that you define trading order flow. I'm looking at the flow on the chart graphically as opposed to looking at it on the DOM numerically. One way is not right or wrong. It's just a matter of preference and what you feel that you can most closely connect to. Okay. Okay, all of this was done live in real time. Not every window of opportunity gets closed. In other words, there are occasions when price does not complete the next logical high probability move. You're probably familiar with it. It's called getting stopped out. Just one of those windows was worth 10 ticks or $100 per contract traded. Once you've earned the right to trade 5 contracts, the same 10 ticks become worth $500. Now, our methodology of getting from wherever you are, and remember, whatever brought you here will not take you there. Number 1, put together 10 consecutive days of reaching your goal in SEM. Go live with 1 contract. Use the 1 contract to increase your account balance by $2,000. That's when you add another contract. Repeat the process. At $100 a day net, it takes 20 trading days to increase your account balance by $2,000. Once you've added your second contract, that puts you at $200 a day. That's the same 2 points or the same 10 ticks. 2 contracts is $200, so now it's going to take 10 trading days to increase your account balance by $2,000 as opposed to 20. At 10 contracts, it's going to take 2 days to increase the account balance by $2,000 with the same 8 ticks in the ES or 10 ticks in crude or gold. By the time you reach 20 contracts, if you choose to build your account that way, if you choose to build your trading business that way, it takes 1 day. At 20 contracts, you literally can add an additional contract on a daily basis if you're prepared for it. And if you've reached 20 following this methodology where you only add contracts with profit you earned in the market, hopefully you are ready. Now, this last part is simply a function of math. It is strategy agnostic. All right. Here's that window as it closed on this candle, and then we traded through. We put in a new high. The trend is still intact. We pulled back to the BBC. It holds more often than it doesn't. So we had a leg, we had a retracement, we had a leg, we put in a new high. So what's price trying to do now? If the opportunity presents, I like 32.65 to 32.55. I also like 33.30 to 33.40, whichever presents first. Okay. So I think that covers all of the charts from last night. As long as price is above the 30-minute BBC, we anticipate higher prices. If it gets below, then we anticipate lower prices. To move lower, in the example that we were just looking at, price would need to overcome the BBC and blue and climbing and previous swing lows. The path of least resistance usually gets my attention. I call that conflict-free trading. Okay? So, My goal is to teach you the highest probability setup, keeping, of course, the BBC, the zones, and the obstacles front and center, navigating from one to the other. And see what happened? There was that new swing high. Price came back to the BBC, holds more often than it doesn't. We get above red and falling. It becomes blue and climbing. And hopefully you can see this beautiful window of opportunity from here right up to that swing high. Okay. And let's see. New high. Now attempting new high. Now attempting, and we got the new high. New high. And there's it up close. Okay. All right. Now again, if you're on the trial, you have access to this channel, so you can go, you can read this if you have questions, if you need help. Crude consolidation, preparing for move one way or the other, whichever way it heads, you know where it's trying to go and where it will potentially find support or resistance. A close below blue and climbing points price at the BBC, right here. See? We're consolidating. If we close below the blue and climbing, the next candle is probably going to turn it into red and falling, and that tells you that price is now attempting to go back to the BBC. It will attempt one or the other. Price is always trying to get back to the BBC, or it's trying to break the previous swing high or swing low. The move supported by the current trend always has the higher probability than the counter trend. So you see we went from this to this to this. 30-minute BBC down at 32.75. If you decide to practice trading order flow, make sure you do it in sim until consistently profitable. And don't attempt to trade every little turn. Wait for the ones that stand out and wink at you, the obvious, as Bert calls it. Okay? All right. I said I was going to have to take a break, and I am. So let me do that real quick, and then I'll come back and we'll finish up the recap. Let me just throw a little sticky note up on the chart. 5-minute break. Be right back. So, walk the dog, make the sandwich. I'll see you in 5 minutes. All right, and we're back. All right, so we've covered so far S&P. Here's the S&P. So pull right back to the trigger, right? Now, printing a red candle. What does that tell us? Leg, retracement. Price is currently attempting to do what? Challenge this low. Right here at the low of this candle. Could that be support? Certainly could be. It was before. So where's price now? 27.70. What's the swing low here? 63.75. So is that a valid window of opportunity? 68 to 66? Absolutely. This is on a 30-minute chart though, but you don't have to trade it off the 30-minute. You could utilize your smaller time frame, 5-minute, range chart, whatever you prefer, to give you the highest probability, lowest risk entry that you can find. Now, just because you understand what price is trying to do, whether that's break a new high, or break a previous high or previous low, or return to the BBC, armed with that information, you step into the world of high probability trading. But as I said earlier, not every window of opportunity closes. Okay? It's also called being stopped out. In great detail over the weekend, I went through the process that is in the 2420 blueprint, which every new passport holder gets a copy of. If it takes you 10 trades every day, if you're trading the S&P, if you pay $5.85 per round turn, if it takes you 10 trades to gross 2 points for the day, after commission, you're still profitable. That stirred up some good conversation. Well, how can that be? How's that so? So I broke it down. I showed everybody the math, and it's all in the trial group, or the trial discussion group. So if you're on the trial, make sure you go there, scroll back up to the weekend, where I walk everybody through that process. In fact, I think it's probably worth showing it to you right now, so that you, because without this understanding, here's what happens. You get stopped out. It's a new day. You get stopped out. You get stopped out again. Oh. Then you get stopped out again. Right there is when most traders are going to go, nope, I'm out of here. Not going to do this. Okay. If you can get stopped out 3 times in a row, you can be profitable 3 times in a row. So let me scroll up real quick and find the discussion from the weekend. Might have been in the members discussion group. See, it would have been Saturday, so this is March 8th, so no, it's still up here. A lot of good information, a lot of your training will come through these discussion groups. I'll point this out too. It's also why I'm very careful when I'm doing the daily recap to point out that whatever happened with any given alert is based on what the market made available. We don't make it available. The market does. Every passport holder has the same opportunity to enter at the published price, exit at the published target. Doesn't mean anyone did, or it could mean everyone did. The reality, of course, lies somewhere in the middle. When looking at a historic 30-minute chart, it's impossible not to have great faith in your definable edge. However, in live markets with price churning up and down, that faith gets challenged on a daily basis. Once you understand how markets work and you have an actual statistical, mathematical edge, it really becomes a head issue. The majority of traders out there really don't understand how markets work, and most traders don't have a true statistical, definable edge. You and others here are part of a great minority. However, your results will be no different than the masses until you resolve the issue between your head and your heart regarding your definable edge. The dilemma can be summed up like this: does the pullback to the BBC on the 30-minute really hold more times or more often than it doesn't? And Joe was quick to say it does, because Joe's done the work. It's not a head issue with him anymore, it's a heart issue. He understands, it's written on the tablet of his heart, that a pullback to the BBC on the 30-minute does hold more often than it doesn't. Pull up any market, go back weeks, months, years, and count. So the issue then becomes, can you bring that faith to a live chart? And honestly, some people are never able to resolve that. At some point, you have to step out of the boat or not. Joe then commented that he wishes it was more obvious on the 5-minute due to his impatience. See, he's identifying his issue. Now, just identifying your problem doesn't make it go away. But once you know what the problem is, now you can set forth some kind of plan to deal with it. Understanding the lay of the land can help to build your faith. Understanding where price is trying to go at any given time also helps to not only strengthen that faith, it increases your statistical edge. If price is above the BBC, it's trying to get to the zone overhead. Previous swing highs and swing lows represent the obstacles price will face on its journey to complete the mission. The reverse is true if price is below the BBC. Isolating the areas where price has an opportunity to travel at least 2 points before running into an obstacle or the zone itself really helps to clarify things. It doesn't mean it's always going to travel the 2 points. It just means you know you're on the right side of the street and there's no obstacle. Obstacles are determined by simply looking left. Being on the right side of the street and having no obstacle closer than 2 points should take your definable edge to at least 60% or better, hopefully much better. And I never looked to see if it was Sir Isaac that said once an object is in motion, it will continue in that direction. I reference here this live real-time 30-minute chart. Okay. Would we see the window down to the low of this candle? We've now taken out the low of that candle. Okay. That opens a new window. Where? Down to the low of this candle. Okay. All right. Once an object is in motion, it will continue in that direction until it encounters a force greater than itself. If your risk is 2 points, you can always look for situations where the closest obstacle is 4 points. That doesn't mean you'll get 4 points. It just means you have a greater statistical edge of at least getting 2 points and leaving the door open for more if you trail your stop. Also keep in mind that the market overcomes obstacles in every direction all day long. We just saw it overcome an obstacle right here, live in real time. If an obstacle is 4 points away and the zone is 6 points away, the potential for price to overcome the obstacle and be pulled the extra 2 points into the zone is compelling. The closer price gets to a zone, the greater the probability it will actually make it to the zone. It's sort of a magnetic attraction type of thing, for lack of a better term. Of course, there are a million plus indicators and oscillators and other things that will supposedly increase that probability. But at the end of the day, do they really? Not to my knowledge. I can't think of anything I've tried, and I've tried most things, that does that consistently. What I find is the more stuff you put on your chart, the more conflict, and confusion that you're going to find. Okay? Remember, whatever brought you here will not take you there. Here's CFRN. People come to CFRN because they have not been able to find any consistent profitability in the market. Whatever brought you here will not take you there to consistently profitable trading. If you have baggage you still haven't unpacked from the journey that led you to CFRN, it's time for some spring cleaning. Now I'll show you one last thing here that we discussed that led into this discussion. Okay. Now, I talked about what the blueprint tells us about how many trades. Okay. If you can reach your goal, 10 trades or less, using the S&P as an example, the 585 round turn, this is what I said earlier, never open your chart for the purpose of placing a trade. Open your charts to see if there is a trade. So then there was a good question that was posted by, I think it was Bill. There's talk about the edge and about confirmation. $10 round turn trades at 585 equals $58.50 in commission. If you gross 2 points, that's $100 on the S&P. If you subtract your commissions, then even though it took you 10 trades to get 2 points, you don't feel like a hero. When you do the one and done, well, you feel like a hero. But when it takes 10 trades, you don't feel like a hero. But you're still profitable. Now, Bill asked, well, what about the losses on those 10 trades? If you risk 10 points and price immediately reverses and goes the other way, you're out 10 points. If you risk 2 points and price immediately reverses and goes the other way, you're only out 2 points. 2 points gross means after your stop outs. Now, as an example, trade 1, you get stopped out for 2 points. Trade 2, you get stopped out for 2 points. Trade 3, you get stopped out for 2 points. Trade 4, you make 2 points. Trade 5, you make 2 points. Trade 6, you make 2 points. Trade 7, you make 2 points. In this example, it took 7 trades to gross 2 points. Just an example. 7 times 585 is $40.95 in commission, which leaves $59.05 profit per contract. In this example, you were stopped out 3 times. You had 4 profitable trades. That's only slightly better than 50-50 or a coin flip. It's also the definition of a definable edge. It's also the same as waking up, putting on 1 trade, getting your 2 points, and being done for the day. The only difference is how you feel emotionally, okay? And of course the amount of net profit. Now I see a question here in the chat box. If price is below a buy CTA, does that mean a sell? Not in and of itself. I mean, in fact, I'm not sure, Arturo, if you can give me a little more detail on your question. Are you talking about being below the short trigger or being below the long trigger? Okay. Here, this might add a little clarity to the situation. Bearish cross, price pulls away. Price pulls back to the trigger in the BBC, and that led to what we're seeing unfold right here, right now. Okay? So just being above or below a trigger in and of itself, again, you can just trade the trigger. Or you can do yourself a favor, look at the chart and see if what you're about to do is supported by what you see on the chart. Obviously, we can see here clearly we've got red and falling. We've got red and falling. We're below the 50-yard line. Okay. Now, if this had turned blue, I'd view it as an obstacle. At this point, this red and falling is complementary to being short. Where do we expect to find support? Well, it could have been at the low of this candle. It could be at the low of this candle. It could be this swing low. If all those obstacles are overcome, then that's going to take us down into the short trigger. So, Arturo, I hope that helps. Let's see what Crude did last night. Get these out of the way. Okay. So, last night, the alert for Crude, the Concierge Trade Alert. I already scrolled through all of the logics. So on Crude last night, we wanted to be long at or above 31.85, short at or below 30.65. Okay. So the long side, 31.85, right about there. Come on, 31.85. Okay. From 31.85, we put in a leg. This retracement, the swing low was 31.78. So does that mean it got back below the trigger at 31.85? Yes. That's what it means. Okay. So this first leg from 31.85 up to the swing high at 33.73. Alexa, 33.73 minus 31.85. It's 108. That's an $1,800 per contract move. Swing high over here. Alexa, 34.60 minus 31.85. It's 275 ticks at $10 a tick. That's if you get out at the exact swing high, which again is very difficult to do because you don't know it as such until after the fact. As this leg was building, did we have good reason to believe that this area would be good resistance? Yes. Previous swing high always represents good resistance until proven otherwise. Just as a swing low, if price were to come back to the trigger, drop below the trigger, not re-trigger, and start heading down, and you have to look at that area. Now, until this area is broken, or this area is broken, price is going to move back and forth between them. You can add some clarity by doing that and doing that. Okay. Now, price is above the BBC. Just had a little bit of a head fake to the downside. So the question becomes, are buyers going to come in and support this thing back up into the area of resistance? Or are we going to close? We've already had the bearish cross. Are we going to close below red and falling? If so, then that opens a window of opportunity to the downside where there's potential support. So on the short side, you have a window right there. Okay? You have to understand how markets work. You have to be able to read the chart, understand what the chart is telling you, and then take the appropriate action using the least amount of risk possible. But you always have to have a hard stop in place. Otherwise, you won't be trading very long. Okay. I think the only one we didn't look at yet was gold. And gold's kind of just been shuffling sideways. Short side for gold last night was 1669. $16.69. There we go. So the initial drop took us down. We'll round it up and call it 62. So that's a $700 per contract move. Price gets back above the trigger at 69 and drops to a low of, call it 49. It's a $2,000 per contract move. On this move back up, we didn't quite get back above the trigger. And on this move up, we did not quite get back above the trigger. So there you have it. Logic 247, Concierge Trade Alerts. When you're on the trial, you have access to everything that we do. You get to use our indicators. You get to use our platform. You have access to a one-on-one mentoring session as you become a member passport holder. You have access to unlimited one-on-one mentoring as you need it. Okay. So last week, this week, one more time, we had a busy Sunday night. Had a busy Monday. And I haven't seen anything I like worth putting out on Logic 247 as of yet. Okay. Alerts are posted as opportunity presents itself. If there's no opportunity, there can be no alert. To begin your trial, to begin your journey, go to eminitrainingschool.com. eminitrainingschool.com, no credit card required. We've been talking about marriage the last 3 days. Today, Proverbs 5:18 says, "Rejoice with the wife of your youth." The Bible says, husband, love your wives just as Christ loved the church. Ephesians 5:25, we used that yesterday. Let's take another look at how Christ loved the founders of the church, his 12 disciples. Number one, he recognized their gifts. He rejoiced in their successes. He supported and encouraged them to grow to their full potential. Now, are you willing to do the same in your marriage? When you truly love someone, you won't try to hold them back or seek to control them because of your insecurities. You'll recognize their gifting and help them become everything God called them to be. You'll be able to release them and celebrate their successes. And should their light shine brighter than yours, then you become the biggest cheerleader. Now, if this wasn't modeled in your family growing up, chances are that you're going to have to work at this a little bit. And if you had an unfaithful partner in a previous relationship, you may need to ask God to heal your heart and give you a new level of trust. Building this kind of relationship calls for a level of humility and honesty that you're probably just not used to. It may require overcoming the male ego, admitting your fears, and just saying to your wife, "I love you, and I really want to trust you. Will you please help me?" Until you get through this stage, and feel more secure about your relationship. A marriage partner who truly loves you will go the extra mile when it comes to telling you where they've been and who they spent time with during the day. The truth is, sometimes you have to fight for your marriage. But it's worth it. Because in the end, you both win. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. I'll see you at the bell.